Today I'll be showing you a very cheap option strategy that you can do for about $30 that'll make you about $450 next week if it goes your way. So for this example, I'll be showing you on Tesla. You can copy this trade if you'd like. This is one that I would consider copying, but with most of my other videos, most of these examples are just examples and I would not copy them exactly. So right now, I'm filming this on August 17th, so we're going to set our expiration date first to August 20th for this example. So if we go to the chart, we're going to look at Tesla's movement for the past week. So if you watch right here, you can see the change of Tesla. So it doesn't move all that much, just a few dollars, and then it kind of starts to drop off, flattens out for a bit, and then drops off again, drops off a little bit more, and starts to raise up a little bit. So now it's sitting around the 663 point. So for this option, first you pick your expiration date. I'd pick the one closest to you or a week or two out. So for this example, I'll show you first on August 20th. So what you're going to do is you're going to sell 2 puts, and I'll show you how to do that. So you're going to choose where you think Tesla will be 3 days from now. I'm filming this on August 17th, so August 20th is 3 days from now. So I'm going to pick where I think Tesla will be 3 days from now. So looking at this, I saw it had a little bit of drop off and now it's on a rise, and that rise moved about 57 to 48. So that rise moved around $9, $10, $11. So it's pretty easy for Tesla to make, $10 moves in a day or two. So let's say for this example, I think that on August 20th, I think Tesla will be around $670. So we're going to sell a put right here. And then what you're going to do is you're going to buy a put above and below whatever point you chose to sell the puts at. But they have to be equidistant from each other, meaning if I were to buy a put one above, then I have to buy the put below one below. You can't do it like that because that's one gap right there from 670 to 675, but this one is 2 gaps from 670 to 660. So if I really wanted to buy the put right here, then below, then the one that I buy above has to be that. You can see it's equidistant from each other, a gap of 2, 1, 2, 1, 2. For this example, I'll be showing you this way because it makes it as cheap as you can. So you're going to see right here, it's going to look a little weird, so I'll show you how to fix that. So click the drop down arrow, click custom, go to the one we are selling, and then you're going to highlight that and make it 2. Now you should see this. And this looks very promising. The most we can make here is 470 if it goes straight perfect, because we sold. The reason it's at 670 is because this is where we chose to sell the puts at. So if it happens to land on 670, which it probably won't, but if it does, that's the most we can gain at $470. And it's going to cost us $30 to put this option into place. And you can see our max loss is $30. But you can see from right here, if it'll let me, from 665.30 all the way to 674.70, we're in the green and we're making money. And you can see it goes, it's a lot of money just when it moves by a couple quarters. It can go from $40 to 119 to 155 to 226. So it moves very quickly as long as it's within that range, and that's about a $9 range. So it's pretty realistic. But like I said, the max loss is only $30. So if it does go wrong, then we just lose the $30 that we did to put this option in place. But I will totally take those chances because of how much premium we can gain if it happens to go in that green area 3 days from now. So I'll show you what happens if you spread it out a little bit more. So let's say I chose to do it that way. So now our max loss is minus 128, and our max gain is 872. And our margin increased by a little bit. So if you remember from last time, it was 665. Now it's about 661, so it increased $4 on that side. And it was about 675, I think. Now it's 678, so it increased about $3 on this side. So our profit margin is a little bit bigger, so we have a better odds of making it in there, but we lose a little over 4 times the amount of money. But if it's in the profit margin, which is bigger, we gain a lot more. So you can take your chances that way. See what you like. I'll show you when it's set up a little bit later from now. So we're going to go to August 27th. That's 10 days from now. So like I said, we're going to sell 2 puts. let's say then I think it'll be around the 675. So I'm going to sell put there. And then for the lowest cost, we're just going to do the closest. And then go back here, click custom, go to the ones we're selling, switch that to 2 again. So there's that. So there's 30, 470. So it's set up just about the exact same. It just depends on when you think Tesla will reach that point. If you think it'll take it, 10 days to reach this zone, then do that way. If you think it'll be there in a couple days, I mean, Tesla moves several dollars a day. So I would definitely set it close if you think it'll move rapidly in that time, or you can set it out further to give yourself some time to reach in that point. And you don't have to stop the option on expiration date, but expiration date is when you'll make the most money. So if it's in the zone a little earlier, let's say I set this to August 27th, and on August 24th it's sitting somewhere around the 675 point, 673, then I can cancel the option. I just won't make exactly $341 like it says right there. I'll probably make a decent amount less, but as it gets closer to the expiration, your profits will increase as long as it's sitting in this range. But this is this is options trading, so I would do all of your research to see all the risks behind this, assignment, stuff like that. We are selling something, the 2 puts we're selling right here, so there is risk of assignment. So I would look up, what is assignment, how to prevent it, and all of those things. I would look up everything that can go bad in options trading just before you do it. And before you put this option into place, make sure you learn how to close it. There's tons of videos on YouTube that you can look up on just simply how to close an option. It's pretty easy once you know how, but I would learn how to close them before you start them so that you're not just stuck with some option that you can't close in case things go south. But if you're looking for some different option strategies, check out my channel for more. Subscribe if you enjoy this type of content. I post this stuff just about every day. And if you have any questions, as always, comment them down below and I'll be sure to answer all of them. And thank you for watching.